Hello everyone, my name is Teresa and I want to welcome you to this new RankiaPro interview. And today we have the pleasure to talk with Giordano Lombardo, CEO, co-CIO and founder of Plenisfer Investment, an investment boutique that is celebrating its first successful 5 years of existence. So hello Giordano, how are you?
Hello, and thank you for having me.
Thank you for finding the time to be with us. So without further ado, let's start this interview, shall we?
Absolutely.
Great. So our first question, Giordano, is, Plenisfer has been celebrating its 5th anniversary. So what do you consider to be the main achievements that you have made in these first 5 years of management?
Sure. 5 years is an important anniversary for a fund because it's the first period in which you can really go out and show the track record of investment performance and let's say focus on building the business out of that. And we have to be happy about this, not just because we reached the 5 years, but also because this has been a very eventful 5 years time. We had numerous things, including COVID when we started the fund, and then we had the crisis of 2022, and then Trump, and so on. So I think the major thing of which we are happy about is the fact that our, let's say, reason for starting Plenisfer, which was to present a different way of looking at the investment, a way which is not based on traditional benchmark, but really thinking outside of the box and finding originality has proved to be successful. In fact, we delivered a performance which was in line with our expectation on all the 3 funds that we have, and as I said, this is the basis for what I consider the first mile of a long marathon, and not just the end of it.
Very interesting insights, Giordano. Now, what can you tell us about your management and how has it evolved since Plenisfer inception?
Sure. We started with 4 founders and all very experienced colleagues who have been working together. We have been working together for more than 25 years in the market and in the investment world in the same firm before. So we were really, let's say, used to work together and to share a philosophy of investment management. Very soon after these 4 senior managers who have a background of CIOs of respectively fixed income, equities, and emerging market, we had also the addition of specialists such as an equity specialist, Marco Mancini, who used to be head of research at our previous shop, Pioneer Investment, or Stefan Benedetti, who is a very senior distress manager, or on the other side, on fixed income, people that, let's say, not worked with us in the past, but share the philosophy. And so Khalid Ataullah, for example, was managing credit and fixed in an hedge fund, in a fixed income, and Carlo Gioia is also a very important addition to our team. He joined 3 years ago after a long experience in Asia and living in China. So we now have 8 investment senior professionals who bring really the expertise of generalists on one side, CIOs, but also specialists. And what I say always, the beauty of being a small team of 8 senior people plus a few more analysts is that you always have all the team sitting together around the same table. What does it mean? It means that we are able to discuss really any investment idea from very different angles. So maybe we are discussing an equity idea, but the credit or the macro perspective are always present at the table. And this, I think, is the secret sauce of working in a small team, but very cohesive.
Mm-hmm. Small team, but great team. Thank you, Giordano. So you mentioned it during the first question, but so from the very beginning, Plenisfer has stood out for an investment philosophy that goes beyond just outperforming the benchmark, and above all, it avoids the so-called easy trends. So I wanted to ask you if this message has been understood by the investors, and I'm also interested in knowing if you think that with time, more managers will adopt this approach.
Yes, this is let's say the reason why we started Plenisfer, as I mentioned before, in the sense that we believe that the last 20 years, definitely before COVID, before we launched the firm, were characterized by very positive trends in the industry. Probably the most important being the secular decline of interest rates, which brought with it, let's say, a strong tailwind for all asset classes, equities, bonds, and let's say the entire financial universe. So we could have, of course, there have been crises like the 2008 and 99, but overall we had 2 or 3 decades of very positive trends for the financial markets. Now we believe this is the let's say the past. We believe the future is going to be pretty different, not only because of a different financial landscape. Clearly, we are now probably at the beginning. Instead of a secular increase in interest rates, or at least definitely not of easy financial condition like the ones that we have in the last 2 decades, but also we have in front of us a more fragmented world in terms of economic fragmentation, in terms of geopolitical fragmentation, and in terms of also of let's say internal politics of different countries, which make let's say the social and political cohesion even lower than in the past. So a completely different framework for which, in our opinion, a different approach is required to manage money. To your question, do clients understand this message? Absolutely, yes. They understand that something different is needed. Clearly, it will take time for this approach to be mainstream, because most of the industry, in my opinion, is still working with the old paradigm. We are one of the few that are working with this, let's say, outside of the box mentality, looking for opportunities where the opportunities really are. And I think this is an advantage for us because, as I said, we are now in a small minority of managers who manage with this type of mindset. But over time, I believe other will follow. But I think that clients are very receptive of this philosophy and this approach.
Very interesting. And speaking about the investment environment, we would like to know, how do you think the market and the investment environment itself has changed over these past 5 years, and also how is Plenisfer adapting to all of the changes that we are seeing?
In a sense, as I mentioned before, we are, let's say, at the beginning of a new paradigm in which we are going to have less favorable financial conditions. I believe that most of clients and investment managers have been used to a kind of permanent bull market, which I think is not going to be what we have in front of us. We had a bit of the experience in 2022, for example, where both fixed income and equities were down significantly for the year together. And this is not, let's say, something usual. In the past, this has happened in very specific periods. For example, in the 70s, in which the correlation between equity and fixed income was not really working in terms of traditional asset allocation. So when you have this type of situation, you have to find different ways of combining portfolios, as I said before, not based on traditional asset allocation. I believe this is also what we are going to face in the future, not only because of the increased risk I was mentioning before, geopolitical risk, political risk, and macroeconomic, but also because the industry itself is changing massively. And I believe that the approach based on benchmark or based on indexes, that is an approach that works very well in a bull market, in positive trends, is an approach that is going to struggle if the market is going to have the feature that we expect, which are, as I said, higher volatility, less predictability of the macro trends, which means also less predictability also of the investment opportunities.
Thank you so much, Giordano, for all of these insights. Let's talk now about Plenisfer's first fund called Destination Value Total Return, because it has achieved a performance of nearly 50% during its first 5 years of work. So what do you think have been the key drivers of this success?
The two drivers are one, what I already mentioned. So the fact that our philosophy of total return is based on finding ideas where they are globally. So we invest globally in equities, in credit, in currencies, in commodities, all in assets in the liquid space. So our funds, including Destination Value, is a UCIT fund, a Luxembourg UCIT fund. So we work in the UCIT space, in the liquid space, but with the total freedom of finding the opportunities where they are, irrespective of the fact that a particular name or a stock is present in a benchmark or has a high weight in a benchmark. And so we can find the opportunity from, I don't know, Chinese technology stocks to European mid caps to Latin American credit to, as I mentioned, commodities. For example, we've been playing commodities that are now a bit more known, like uranium, but a few years ago, very few managers were invested in, or more, let's say, mainstream opportunities such as gold and precious metals. So the first reason for the success has been, as I said, this ability to really think outside of the box and find opportunities anywhere they present themselves. This can give you an idea of a very disparate portfolio, but, and this is the second reason for the success, we do have an instrument, a way of putting all these things together, which is our proprietary risk budgeting tool, which is a technology that we developed within Plenisfer to really put together the different ideas I mentioned before in a portfolio construction exercise based on risk allocation. So we do allocate to risks and not just to assets. And importantly, also to know in real time, every day, on which risk we are sitting. Not only, let's say, macro or let's say primary factor risk such as credit, equity, inflation, and so on, but also bespoke risk. So we can decide that we want to, for example, measure how much China risk we have versus the rest of the world. And this is a tool that allows us to do this. So these two things, original ideas plus risk budgeting, I think are the way we build the portfolio and have been the reason why we've been able to achieve the performance you mentioned. So 8% annualized, but with much lower volatility than the market volatility, and this is also very important.
Mm-hmm. Very, very interesting, Giordano. Thank you. And let's continue talking about funds, because at the beginning of this year, Plenisfer Investment launched the Destination Capital Total Return Fund. So what can you tell us about this fund? What are these distinctive features?
Yeah, Destination Capital is the third, let's say, launch in the roster of our funds. The second, let me just mention briefly, is Destination Dynamic Income, which is a fixed income unconstrained fund that uses the same, let's say, levers of performance of returns than our flagship cross-asset fund, which was the first one we launched that you mentioned before, Destination Value. So Destination Capital is the third. So we now have the full spectrum of the risk, let's say, appetite. So as I said, on one side, more fixed income oriented Destination Dynamic Income, the cross-asset fund in the middle, and on the highest risk spectrum, Destination Capital, which is an equity-oriented fund. But once again, the way we measure this fund is a total return approach. So very much like the other two funds, this is not a fund that we measure against a benchmark. We are able to find ideas in the equity space globally with the objective of providing a double-digit, so equity plus return with an unconstrained approach in terms of a reference to a benchmark. So we do not have any reference to a benchmark. And this is, let's say, the way we manage the fund, very much in line with the ideas that we have already, let's say, mentioned regarding the cross-asset fund. The only thing that makes the destination capital fund different from the other two is that we are also able to use more mid to small cap opportunities that are maybe too specific for the cross-asset fund. For example, we have positions in a couple of mid-cap names in Italy or in Brazil. For example, we bought banks in Brazil that do not have space in the larger flagship cross-asset fund. Destination Capital has only 18 months of life. It has had a good start, so because it has provided 30% of performance since its launch. I believe once again it's the beginning of a good story, hopefully, but hopefully is again the first mile of a long marathon.
Mm-hmm. Well, from RankiaPro, we'll be following the news surrounding Plenisfer very closely. So, Giordano, looking ahead, what are the main projects or developments that you have in mind for Plenisfer to strengthen its position not only in Italy but also in Europe?
Yeah, from a pure commercial point of view, our goal is really to expand our footprint outside of Italy. Our current business is basically 95% an Italian business. But this investment and management team has experience of working with clients on a global basis. In our previous shop, we were really running a global business spanning from the US to Latin America to Europe to Asia. So our goal is we are a boutique, so we have to go. We are first to work and then run. So we are first going to look into other European countries, such as Switzerland, which we already some business, but also Spain, France, and so on. And by doing this, we have also developed a number of relationships with counterparts that are going to help us on the distribution front. We don't have to forget that we have also a partnership with Generali, who is a part of our shareholders base that is also helping us, let's say, expand our commercial footprint outside of it. And on a more internal basis, instead, we are still building the team. We are now in particular focusing on building our distribution team. And an important last thing I want to mention is we have an extensive use of technology, and especially on the new models of large language models to enhance our research. I think that we are not anymore in an investment world in which you need 50 or 60 analysts to cover everything. We, as I said before, are able to generate investment ideas really on a regional basis, and the technology, the AI technology, makes our investment research super productive. So even a nimble and small company like us can be very, very efficient in the research and very competitive with the use of technology now. So I'm very excited about how we can deploy AI in our investment research.
Mm-hmm. Well, very interesting. And thank you so much, Giordano. This was actually the last question of this interview. And from RankiaPro, we want to thank you again for finding the time to be with us, because we know you're very busy. So thank you very much.
And thank you again, Rankia, for having me, and good luck for everything.
Thank you, and thank you to all of the investors watching. As usual, please don't forget to share this interview and follow us in LinkedIn. See you next time. Goodbye.